So once again, I want to welcome you to the day 5 of the bootcamp, Advanced Quasimodo, and today we'll be learning about point of interest. So point of interest, abbreviated as POI, is the area where traders want to buy, like where we want to buy or sell. Point of interest, the point or the zone where we desire to buy or sell using our structure and strategy, the Advanced Quasimodo. Okay, but before then, I just want to show you something. So we have two types of Quasimodo, all right? So we have two types of Quasimodo before I get to the POI. So let me just quickly show this. There are two types of Quasimodo. So number one, we have the primary Quasimodo. Which is a primary Quasimodo. This is how the primary Quasimodo looks like. So this is how the primary Quasimodo looks like. So the Quasimodo is the failed order block. This is our Quasimodo, okay? The previous break of structure, that's our Quasimodo. So this is for a bullish. So let's do it for a bearish. Okay, so this is a primary Quasimodo. The primary Quasimodo does not have structural liquidity. But with this strategy, we don't trade the primary Quasimodo, okay? So the Quasimodo is the previous break of structure, which is called the stop alt zone. Stop on zone. That's where the market players stop on lots of traders. So they use this shoulder to stop all traders. So usually that shoulder do have another block, let's say breaker block, okay? So this is a primary Quasimodo. And then we have the secondary Quasimodo. Number 2 is the secondary Quasimodo. Also known as the Advanced Quasimodo. So take note of that. We don't trade the primary Quasimodo. We only trade the secondary Quasimodo. So the secondary Quasimodo is structure and liquidity. Okay, so this is what the secondary Quasimodo is all about: structure and liquidity. So remember what we talked about. For this secondary Quasimodo, we have structure, liquidity. Okay, and then what So this is the secondary Quasimodo. Where we have this for a sell, for a sell, this. So this is the secondary Quasimodo, and this is what we trade. We trade the secondary Quasimodo, which is called the Advanced Quasimodo. So for the Advanced Quasimodo, you need a liquidity to trade it. But the primary does not require a liquidity to trade. But we don't trade the primary Quasimodo. Take note of that. So right now, let's look at POI proper, point of interest. So what is point of interest? As I said earlier, point of interest is your buy and entry zone where you are interested as a trader to either buy or to sell. The point where you enter your trade. So for this strategy, we have two types of entries. For the Quasimodo, for the advanced model strategy, we have two main types of entry, and they are as follows. Number one, we have order block. And number two, we have breaker block. Number one, we have the order block. Number two, we have the breaker block. For the advanced Quasimodo strategy, we have two main types of entry, and they are as follows. Number one, order block, and number two, breaker block. So yeah, I'll be showing us how to enter a trade with the advanced Quasimodo. So let's say we have our structure for a bar. Let's say we have our structure for a bar. So this is our structure for a buy. Remember, we sweep and then transactional liquidity, and then we have liquidity, structural liquidity, and then market keep buying. Okay. So when we have a structure like this is the structure we trade. So when we see a structure that is like this, okay, with all criteria intact, with application of the law of cause and effect, and knowing your buy zone and your sell zone. Once all those criteria are confirmed, the next thing you want to do is you want to know where to buy and to sell. And remember that I said you buy at discount, okay? And you sell at what? Premium. That's why most of the times signals are not the way of trading. For example, if you see a signal and the signal tells you buy now, signal that tells you buy GBP USD now without data, you won't be able to know where to enter your trade, the appropriate zone or the appropriate price area where you want to buy or to sell. So things like that can be dangerous, and that can blow your account, even if the person who posted the signal is making profit or is in profit. But you, because you don't know the exact point to enter a buy or to sell, you may lose your money or blow your account before the market goes in your favor or direction. Okay, so that's why knowing POI is very important. Knowing your POI, your point of interest, each time you see structure, where should I buy? Where should I sell? It's very important, and it's a unique thing to know. So for this, we want to buy at, since it's a buy, we want to buy at the discount. We don't want to buy just anywhere. We want to buy at a discount. So each time you see your structure and all criteria are met, the next thing you should be looking out for are order block, which is your POIs. First, you anticipate to look for order block. And second, you anticipate to look for breaker blocks. A breaker block is a failed order block. So let me include it. A failed order block. That means a block that didn't hold initially. So that will be used as a POI. So for this one, now we are looking at order block. The first one is order block. So when you have all your criteria met, you want to look for order block. So where do you find your order block? You look at your order block here. This is where your order block usually is situated. Now remember that this low is the main low, and it's always protected. You must always protect it. So let's say this is our order block. So this is the main low, and this is the last low. So what price usually does is price will sweep, we come back, sweep through the last low, and then come to your POI, and then start buying again. So you want to set your order here, and then place your stop loss. Okay. So you want to set your order here, place your stop loss slightly below the protected low, and your target, the recent high. Your target is the recent high. So this is the order block entry. This is the order block entry. And remember, this is your structural liquidity or your engineered liquidity. Remember that. So this is the order block entry. The same thing for a sell. Let's go for a sell. Let's look at a sell. You have structure. Liquidity, and market keeps going down. In a case like this, you look, and then what happens? You locate your order block. Your POI is your order block. But before that, remember, for a sell, you want to sell at the premium. So you don't just want to sell at every area. No. Okay, that's not where you should sell. So you want to sell at a premium, but at a premium, where exactly do I want to sell? I want to sell at the order block, which is the supply zone inside the structure that I'm trading. So the supply zone is the order block. So this becomes our POI. If this is our POI, remember, the main low is usually protected. This is the main low, so it's usually protected. Okay? So what price does is that price will come back, sweep this last low, and then touch the order block and then start selling. It comes into the supply zone, which is the order block, and starts selling. So you want to place your order exactly at the order block. You want to place your order where? Exactly at the order block, and your excess slightly above the protected high. And then your target is the recent low. Remember, this is our structural liquidity for a sell. Order block entry. So we have the buy and the sell entry, order block entry. Now, the question now you want to ask is, how do I differentiate? How do I know that, okay, in such a structure, I'm going to choose the order block? Each time you have the recent break, which is this, before the sweep, okay, a bit far from the main low, you take the order block. So I'm coming to that. I'm going to explain that. But let's continue and go to the breaker block. Do you understand what I just explained? Choosing your POI. If you understand what I said about the order block, kindly go to the chat box and say, I do understand. If you understand what I just said about the order block, go to the chat box quickly and say, I do understand. Or say, I do. Okay, good. Now let's go to number 2. So for the breaker block or failed order block, so let's assume we have structure. Our structure, sweep, break of structure, remember, sweep, transactional liquidity, structural liquidity, market structure shift, we have market still moving upward. So usually for the breaker block, which is a failed order block, you want to look for the failed order block. So where is the failed order block? This is the failed order block or the stomp hunt zone. This is where it is located. And sometimes you may have a failed order block and still have an order block here. That doesn't matter. What matters is the position of the failed order block. That means the wick, the position of the failed order block. Okay, the position of the failed order block. That is what matters. Where is it located? So if the failed order block, which is the breaker block, is far, let's say like this, you don't take this as a POI because why? Price already used it for this one. So you don't take it. So what you want to see is that I want to see this failed order block very close to this sweep. So if it is very close to this sweep, what am I going to do? I'm going to take the failed order block, which is the breaker block. A breaker block is an order block that breaks through other blocks of candles. So you can see that this breaks through 1, 2. So then this is our Quasimodo. So this failed order block, which is a breaker block, breaking through this first wall and the second wall of candle, is our breaker block, is our POI. So what do you do? Remember, this low is the main low and is always protected. Is always protected. And we have our liquidity. So where do you place your entry? You place your entry here, and then your stop loss slightly below the main low. Target, where do you target? The recent high. And what price does is that price will come back and then tap into the breaker block, which is a failed order block, and then boom. Very easy. Easy as ABC. It's very, very easy. So this becomes the breaker block. Remember, that's your POI. So you have to take the rectangular box, draw it out, and then set. So let's go for a sell. The same thing for a sell. The same thing for a sell. So what did I say? Your breaker block must be so close to the sweep. This is the main low. The sweep is the main low. Remember, the main low, it must be close to the main low, but not equal, but close. All right. So what do? All criteria met, you have your structural liquidity. And then you want to choose your POI. Remember, you're selling at premium. So the premium zone, that's where you're selling. But you don't just want to place a sell anyhow. So therefore, which do I choose? I take my breaker block. And remember, the main low is always protected. So what do? I place my order here. And SL slightly above the main high. SL slightly above the main high, and then target the recent low. So what will price do? Price will come back, tap into the breaker, and then boom. So this is the breaker. Now take note of this. Most of the times or sometimes you're going to see a fair value gap between these blocks of candle. That means you're going to see fair value gaps between, just like between these two. You're going to see inverse fair value gaps between them sometimes, and sometimes you might not see them. Okay, sometimes you might not see them, sometimes you might see them. So remember I said this is a failed order block, which is your recent break of structure before the sweep, the last break of structure before the sweep. This is the last break of structure before the sweep, and then change in market direction. And sometimes you may see different wicks around there. Okay, you see market rejecting at this zone. You see market rejection at this zone with different candlesticks. Take note of that place. And sometimes you may not see an order block. What you're going to see is just wick, a long wick. Sometimes you're going to see a very long wick. Okay, at this point, use it as your entry. Use the wick, use the body of the wick as your entry. That's your breaker block. That's your entry zone, your breaker block. Now, let me settle this once and for all. You may be asking, how do I know that I'm going to use the breaker block and or the order block to place my order? Now, it's very simple. In a structure, if you have the last break of structure, very close to the structural liquidity, which is this, you don't take the breaker block or this as your POI. No, because it has been taken already by the structural liquidity. That's where price bounce back from. So where will be your entry? Your entry will be your order block. Your order block here. Do you understand? But a case where you have, so let's do another one. A case where you have the structural liquidity, but then the last break of structure is far from the structural liquidity and close to the sweep, like this. So you can see the difference that this is very far from the sweep, which is the main low, is far from the main low. I mean, the last break of structure, this is your last break of structure. So it's far from the main low. And it has been taken by the structural liquidity. That's where price bounced back from. But in this case, what do? You choose your order block, OB, as your entry. But a case where you have your structural liquidity and the last break of structure is not far from the main low, which is this. This is the main low. This is the last low. The last low is your structural liquidity. The main low, if it's not far from your main low, what do? You choose or you take this as your entry. difference. Look at it. You can see the difference. It's very clear, very easy, and very simple. It's clear and clean. Clear, clean, and classic. So this becomes your POI, BB. And this is where price stop hunts traders at this zone. So what do? You wait for price. You place your order. You can place your limit order. You wait for price. Boom. Same thing here. You wait for price. Boom. Do you understand? If you understand, go to the comment section. Remember, price will always sweep the last low, which is your engineered or structural liquidity. So if you understand, go to the chat box, say, I do understand. If you understand, kindly go to the chat box, say, I do understand. And for those who haven't subscribed to the YouTube channel, kindly go to the Daso, Daso the brand on YouTube, click the link on the chat box and subscribe to the YouTube channel and come back to the class. So if you understand, say, I understand. So we're going to go to live example. Okay, let's look for a live example. We're going to look for a live example. All right. So let's see this. Okay, so this is Ethereum USD. If you can see my screen. Can you see my screen? So we can see that price, this is structure. So we can see that price, has given us structure, and this structure here took out this one here, which is the break of structure. Can you see that? And when we look at it, what do we see? The next thing we see is that we see an inverse fair value gap. We have fair value gap between here. So we want to look for POI. So can you see? We have this. And this is an order block. This is an order block. So you can see that order block aligns with the fair value gap inside, the space inside. And then when we looked at the left-hand side, we could see a breaker. So this is a breaker. I'm going to use the wick. This is a breaker. So what am I going to do? Stretch. Can you see? So usually what price does is that price will come into this, tap it, and start moving upward. Okay? Let's look at something else. Let's look at something else. So let's look at something else. Let's see. I'm thinking of a pair that we can use for this. Let's say if Euro JPY has something for us. Okay, let's go to something different. Let's leave this. Let's go to, okay, let's use the Australian dollar USD, Aussie. Let's use this. So I'm going to clear off this stuff. So we can see structure here. This is structure. We can see structure, right? We are seeing structure here. So this structure is coming from where? Where is this structure coming from? Price is coming from this. Okay. So we can locate that. That's where this is coming from. And then we saw structure. So this is structure. Let me take it a bit. So remember all the criteria. And then we had a sweep, break, a sweep. And then what happened? The next thing we had a structural liquidity, right? And then boom. So this is what we have here. So can you see? Look at it very well. Can you see that? So if I pick up my Fibonacci retracement tool, I place it here. I want to measure the liquidity. So we can see 50%, so it's below the 50%, so it's valid. Is at the discount. So what am I going to do? I will take the last, draw it, which is the structural liquidity or the engineer liquidity. Now, the question is, where will I choose my POI? It's simple. We can see we have another block here, and we also have a failed order block. This week you see here is a sharp move, so it's a failed order block. Okay, so that is loss of order inside this candle. There are orders inside this candle, and that's why you see the sharp move. So since it's very close to the order block, I'm going to choose it, take it. Okay, I'm going to take half of it. As this is a Quasimodo. So this is a Quasimodo. Or, don't be confused, it's a Quasimodo or the breaker block. Okay. So what am I going to do? I place my order here and wait for price. Place my SL at the protected low. That's your SL, and then target the most recent high. That's it. So I wait for price to come in. Boom. Do you understand? So let's look for other ones. Let's look for other ones. So we can see this cell. Can we see this cell that happened? Look at this cell. So we had this structural liquidity. So let's look at them. We had this. I sold this. And then we have this. So what am I going to do? This is my POI. So you can see price came in, tapped, and then protected. That's it. You wait for price. So can you see that? Sharp. Okay, let's also look at something else. So let's also look at this. So what do we have here? We have structure. We had structure here. We had liquidity. Remember, your liquidity must be A-shaped or V-shaped. It must be obvious. And then you can see that this is very close to the sweep. So I take this as my POI. Can you see? It's very close to the peak. And then you place your So price came exactly. Price came in exactly, protected. Targets were the most recent high. That's it. So can you see that? It's very obvious. You can see structure, it's very obvious. Liquidity, obvious. Price came back, tapped into it, and then boom. So you place your limit order, and then you wait for price. Do you understand? So let's look at something else. Okay, let's look at GBP SGD. I think this was a trade that was taken. So I want to go to 4 hours. Let me use 4 hours chart. So can you see this? This was a trade. This signal was posted on a Telegram channel, on Sarah's Telegram channel. Okay. So let's see. Can you see exactly what I'm talking about? You can see that a break is far from the sweep. So what did I do? I go to a lower time frame and pick the order block. Let's go to a lower time frame. Let's go to a time frame like 1 hour. So I went to a lower time frame and picked the order block. All criteria are met. You can see market is buying for long now, for so many days. So what did I do here? Let's look at it again. Okay. So if you check, you're going to see exactly. Can you see that a break, let me remove this, that the break is far from the sweep. So this is a sweep, and we have a long candlestick, a long wick, a long wick with a sharp move, and close to it, we have another block. So what are we going to do? We take the other block. We take what? The other block. And sometimes you can measure the body of the wick. Okay? You can measure the body of the wick. But if you have another block, you take the other block. What do? You just measure it. And then, can you see? Price came in, tapped, and then went boom. These are live example on charts. The price came in, tapped it, while my SL is what? Slightly below the sweep, which is the main low. Remember, this is our main low. So SL protected, main low protected, SL slightly below the main low. So this is our order block, our POI. OB, order block. This is the POI. So can you see? This is what it is. This is what it is. So if you go to your chart, you're going to see several of these. There are many. You will see several of them. Just go to your chart, you're going to see several of them. There are many. All right. So go to your chart, you're going to see several of them. They are so many. So do you have any questions? Anyone that have a question? If you have a question, do well to ask your question swiftly. Do you have any question? Kindly do well to ask your question swiftly. And please, if you have not subscribed to the YouTube channel, do well to go to the YouTube channel, subscribe to the YouTube channel. And do you have any question? Any question here? If you understand, say I do. If you have question, please do it to ask your question. Be well to ask your question quickly. Okay, so in the absence of any question, I believe that we all understood all that was explained here. So finally, before we close, we have a June masterclass, a 2-month masterclass starting on the 5th of June. So for those of us who want to learn from the beginner to advanced and more, okay, apart from what has been taught in this bootcamp, you want to be in our mentorship classes, you want to be in our live sessions and more, okay, for the June class. Please do well to send a message to us, send a message to Sarah. You can send a message to me, any of them, or you fill the form, or the form will be posted already. In fact, the form will be posted in the channel. Click on the form, fill the form, okay? And we'll get back to you. So we're going to end the class here. And don't forget to always stay connected and subscribe to the YouTube channel. So I want to thank you guys for joining our live bootcamp sessions from day 1, day 2 to today being the final day. And I believe that you've gotten lots and lots of value. So invite your friends, those who want to learn about Forex, who want to know how to make money using Forex market and who want financial freedom through the Forex market. This is an avenue for you to make money and be financially free, okay? So do well to join our channels and invite your friends to be part of our channels and sign up for our master classes. Have a great time and bye for now.